Tesla has been one of the worst performing stocks in the last 6 months. In fact, it has probably been the worst performing stock, and it's doing so bad that it seems like by the end of the year, the price of Tesla stock is going to be zero. And that raises a lot of questions for Tesla investors. What is going on with the stock? How exactly did it lose over 50% of its value in just 6 months? What exactly it's headed? Will Elon Musk actually destroy Tesla? I don't think there is a single stock in the market that has been hit as much as Tesla. On the other hand, it's supposed to be the other way around, because Elon Musk right now is one of the most powerful people on the planet. He's the closest person to President Trump, and people expected that when he is going to become president, Elon Musk's Tesla is going to soar and will worth not just $1 trillion, but 2, 3. It will become the most valuable company on the planet Earth. But something went wrong. So let's try to find out what exactly has happened in this video and also figure out what is next for Tesla stock. If you're ready, give this video a thumbs up and let's dive right into it. Just by looking at the graph, you can clearly see that it has been a complete roller coaster. Back at the peak, it has reached almost $500 per stock, but right now it is being traded around $224. The first thing that we have to do in order to find out what is happening with Tesla is to find out its true valuation. If we understand the true valuation of the company, then we can figure out what exactly the stock is headed to. Now, we cannot go into every single metric, but we are going to take only one basic metric to find out if the stock is overvalued or undervalued. And that will help us to determine where the stock is headed to. That will help us to figure out whether the stock is going to rise or it's going to fall, or maybe it is fairly valued at the price that is currently being traded. Now, one of the basic metrics is, of course, PE ratio. And a lot of people have probably heard about that. A PE ratio is a very simple metric where how much investors are willing to pay for every dollar that a company is earning. So if the PE ratio is, for example, 25, then investors are paying $25 for every dollar that a company earns. Now, that leads a lot of people to wonder, why am I overpaying by 25 times for every dollar that company is making? And the logic behind it is that this company in the foreseeable future is going to grow much bigger and will make much more money. Therefore, the dollar that company is earning worth far more than the dollar that I have in my pocket. And we have different kind of ranges for different kind of industries. When it comes, for example, to auto companies, then we have a PE ratio of 5 to 10, maybe 15 in the best case scenario. When it comes to technology, it's something between 15 to 30. Now, the question is that, what is the PE ratio of Tesla? It is right now 110. And that means that investors are overpaying $110 for every dollar that Tesla is earning. And that is after the crash that Tesla has experienced. It's not that the Tesla is at its peak. If you go to its peak, probably the PE ratio was something like 900 to $1 or 1,000 to $1. That was insane. Anybody would understand, anybody with basic understanding of investing and finance would tell you that that was an extremely overvalued stock. But that's not the only thing that we want to pay attention to. What we want to find out that if we actually give it a proper PE ratio to Tesla, what could be its real price today? Now, in order to find that out, we have to first of all take the PE ratio and we have to multiply it by the EPS. Now, and that will give us the price of the stock. Now, EPS is earnings per share. We're going to take the total earnings of the company and we will divide it by the number of outstanding shares, and that is going to be our EPS. If we take our PE ratio and we'll multiply it by the EPS, we will get the current stock price. For example, 110.2 is the current PE. Earnings per share is $2.04. I have the graph right over here. You can literally check the earnings per share for Tesla for its entire history. So if we are taking $2 of EPS and we'll multiply it by the current PE ratio, we are getting $224. And that is pretty much the price that Tesla is being traded right now. It's being traded at around $230. But now, let's do something very interesting. Let's give Tesla a fair PE ratio as its industry. and that is 25, because anything more than 25 is most likely overvalued even for a tech company, unless it's a startup that has a lot of huge aspirational dreams to achieve something huge. Exactly, that's how Tesla positions itself. But anyways, let's take a PE ratio of 25 multiplied by the EPS that we have, which is a little over $2, and that will give us $51 per share. So at fair valuation, if we take just one metric, which is PE ratio in this case, Tesla shouldn't worth more than $51 per stock. But the price right now is around $230 or probably $235. So if you're wondering why on earth did Tesla stock has crashed from $500 to as little as $230, well, let me tell you something. It's supposed to crash much more than that. It's supposed to go to $50. But wait a second. Tesla isn't in a position that Apple is, for example. Tesla is still in that position where it has a lot of potential to grow. That's exactly how it positions itself. They're trying to make an argument that we're still a little company that is going to grow significantly over the years, and that is why a 25 PE ratio does not apply to us. So let's take something a little more than that. If you look at the PE ratio of Nvidia, it's around 40. And some people say that Nvidia is overvalued. So let's take it slightly more than that and give it a PE ratio of 50. At that PE ratio, the price of Tesla stock should be $81, which means that the price right now is still massively overvalued. Do you see why professional investors are not freaking out why Tesla stock has crashed? Because it deserves to be crushed. So the question is that how much Tesla should be earning in order to justify the current stock price. If we don't want Tesla to be overvalued at all, then we will take a PE ratio of 25. And that means that they need an EPS of $10 in order to justify the current price. Their current earnings are $2.04, which means that they have to grow their earnings 5 times in order to justify their price. Right now, their earnings are a little over $7 billion, which means that they have to be earning $35 billion in order to justify the price that they have right now after it has crashed by over 50%. Do you see how overvalued Tesla is? But again, we're going to be a bit more generous with Elon Musk. We're going to be a bit more generous with Tesla investors because I think I will get bombarded with negative comments from people who have invested in Tesla. Let me tell you something. I'm also an investor in Tesla. At PE ratio 50, the earnings per share should be something around 4.5 in order to justify the current price. And that means that they have to double their earnings and earn at least almost $15 billion. And that leads a lot of people to ask the question, why on earth then the Tesla stock being so overvalued, it still has grown so much to almost $500 per share? It makes absolutely no sense or whatsoever. Like, think about it. If the market is filled with so many smart, intelligent investors and it's very easy to find out its true valuation, well, maybe not that easy, but any great investor would know that. Why on earth people still kept buying Tesla stock even though that they knew that it's overvalued stock? In fact, if you look at the data, you will find out that there are actually hedge funds, Wall Street investors who poured millions, tens of millions of dollars into Tesla stock. Why do they do that when they know that Tesla is overvalued? And the answer to that question is the way that Elon Musk is being paid. Elon Musk is not getting a direct paycheck for his position to be at Tesla. His paycheck is directly tied to the performance of Tesla. So we have different kind of KPIs, key performance indicators. If Tesla is going to achieve a certain milestone, then Elon Musk is going to get paid a certain amount of money, or he will be able to receive a certain amount of shares because he achieved those indicators. And one of the examples that I will give you will illustrate everything to you. There was a 10-year plan from 2018 to 2028, and there were 12 milestones for Tesla to achieve. If you will be able to achieve this milestone for Tesla, we're holding Tesla shares. If Tesla capitalization is going to go to $650 million or billion dollars in this case, then our shares are going to grow. If you can take company to that milestone, if you can take company to become so huge, then you will be able to buy 101 million Tesla shares at the current price. So if the current price is, for example, $10 or $100, and then Tesla stock goes to $500, then suddenly when he achieved that goal, Elon Musk will be able to exercise his stock option and buy Tesla shares at $100 and then sell them at an open market for $500. But because Tesla went through multiple stock splits, and a stock split is basically when you have a stock, this price actually going so high, then the company decides to split that stock. So for example, if the price of the stock is reaching $1,000 and then the company is going to go for a stock split 2-to-1, then each stock will be divided into 2 stocks, and each stock will worth $500. Nothing fundamentally changed, but the number of stocks in the market simply has increased, and that makes the stock much more liquid in the financial system or in the stock market. So if you actually do the math for the stock splits, then the current price is going to be $15 that Elon Musk should be able to buy the stocks of Tesla. This is when you start to understand why Tesla stock has grown so much. The motivation of Elon Musk is not to literally make a lot of money for Tesla. The motivation for Elon Musk in order to get the company to a position where he will get his stock compensations. Again, I'm not trash talking Tesla, I'm not trash talking Elon Musk, but I'm simply explaining the logic behind it. And Elon Musk understands how to grow a market capitalization better than anyone else. Because if you look at the market, you see, when you're getting into the market, you are paying for potential future profits. That's what investors do. It's not about today, it's about the future. And the future isn't always guaranteed. Yes, there are investments that are pretty much guaranteed. So you can go and buy a property and invest in real estate. But how much can you possibly get from real estate? 6%, 7%? Maybe, best case scenario, you will get 10%, maybe slightly more than that. And that's because real estate is not really that risky, especially if you get it in a good area. On the other hand, if you're taking a huge risk, then the potential to turn a profit is much bigger. But again, you're getting yourself into a huge risk. So the job of Elon Musk is to convince investors that Tesla is going to go and make a lot more money than you can possibly imagine. So the valuation of Tesla today shouldn't be at how much money it's making today, but at how much money it is going to make in the future. And that's why Elon Musk is so good at creating so much headlines that Tesla is going to take over the world and Tesla is going to worth a lot more than you can possibly imagine. That it's directly tied to how investors expect Tesla is going to do. This is when Elon Musk has endorsed Donald Trump. So investors got extremely excited about it, that Elon Musk is going to become the closest person to Trump. Trump is going to win the presidency and Trump is going to return the favor to Elon Musk and he will give him maybe some kind of tax credits or to support him to grow Tesla. So investors are optimistic that Tesla is going to make much more money next year, and that's why the stock has jumped dramatically. But right after that, when President Trump actually wins the presidency and then Elon Musk gets on stage and he actually declares that Tesla is going to create robo-taxis, and robo-taxis are going to earn Tesla, according to ARK Invest, $760 billion in revenue. What do you think has happened to the market? You see that the stock price has increased dramatically. First of all, Trump won the presidency and Elon Musk has made the right bet, which means that he will reap the rewards of that. Secondly, according to Tesla or according to Elon Musk, the world will be filled with robo-taxis all across the world, but that's not the final price they will pay. When they are going to buy those robo-taxis, they will have to subscribe to Tesla's AI self-driving car, and that's how Tesla is going to generate so much money. And because we're living in such a time where there is so much hype around artificial intelligence, Elon Musk is turning the image of Tesla into an AI company. That Tesla is not actually a car company. It's not just a software company. Tesla, in reality, is an AI company. It's a robotic company. And that's why it has been developing self-driving cars. That's why it's trying to develop robots. That's why it's trying to develop the robo-taxis or whatever. And based on different kind of calculations and potential revenue, Tesla is going to make so much money in the future. And that's why investors got so excited and they started buying Tesla stock. However, you have to keep in mind that during this period of growth, speculators are making so much money. You have people who are in the market not as long-term investors who believe in Tesla, but rather they're making money by the fluctuation of the price. So the more the stock fluctuates, the more opportunities it gives the speculators to make money. If we know that a certain type of news is going to drive a certain stock price, then we're going to buy it. The moment it goes up, we're going to sell it. And when you hear hedge funds, when you hear about those huge financial institutions with so much deep pockets, they do that kind of thing. They buy the stock with using billions of dollars, maybe hundreds of millions of dollars, and then they sell it. Even if they made 10% on $1 billion, that's already $100 million. On the other side, when they have made so much money, they know that this stock is a bubble and it is going to crash. And there is another way to make money out of it. There is a second way to profit out of it. And that's what we call short selling, when you're actually profiting from the crash of that stock. And speculators are actually playing around with this stock and making so much money. Well, the average investors or the immature investors are losing money because they don't understand what exactly is happening over here. Again, after that, when Trump became the president, he started so many trade wars. When you have a trade war, it's very bad for the business, especially when you have a car business. Imagine Tesla importing some of its parts from Canada, importing some parts from Mexico, some parts from China, European Union, Asia, and the rest of the world. And suddenly there are tariffs and we don't know what is going to be the final price of Tesla, what is going to be the final price of the car. And that uncertainty about the future is scaring off investors, and investors selling their stocks, for example, and that's why everything is going down. So if you get into the root cause of it, you can simply say that when Trump became the president, Tesla or Elon Musk did not get the favors that speculators and investors expected out of him. That is one reason why the stocks began to crash. The second reason is because, of course, speculators made so much money out of it. And again, they also started shorting the stock. And thirdly, it's one thing that when investors are expecting so much, it's another thing what happens in the reality. And of course, these trade wars had a real implication and a real impact on any car company, including Tesla. And that's why you see the stock going up, you see the stock going down, and it fluctuates every single day. But it doesn't mean that its true valuation has changed, because if you look at its true valuation, it's a completely different story. It is still overvalued even today. Even if you look at its market cap, it's insane. In 2020, it was like $668 billion. In 2028, they have reached a capitalization of over $1 trillion. In 2022, they have reached, everything has collapsed and they lost like over 60% of their value, and it went to less than $400 billion. We are not talking about the true valuation of the business. Elon Musk is a very smart person. He's a very smart, intelligent person who knows how to drive the market. He knows how to inspire people. He knows how to attract people. So even though that Tesla might not worth today even $600 billion or $700 billion, maybe the real value of Tesla is something around $100 and $150 billion. But as long as Elon Musk can actually keep that hype around Tesla, investors will keep buying Tesla stock, and maybe over time Tesla is going to get so big that it might worth $1 trillion based on its earnings, but that's not the case. But if you know anything about Elon Musk, he will certainly come with something else in order to boost Tesla stock again. It's not going to grow based on its true valuation, but it can most likely grow because Elon Musk is going to come up with something that is going to hype investors, and that hype is also going to bring alongside with it speculators, and the stock can yet again grow to $300, $400, probably even $500. Thanks for watching, and see you in the next one.